Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help. As a corporate partner, you will gain access to a whole ecosystem of innovation. Discover startups that meet your tech interests. Stay updated on the latest trends and network with industry peers. We will help you during every stage of your innovation journey, no matter where you are and where you want to go. Get in touch today.
Hi, welcome to the Plug and Play Insurtech Batch 6 Expo. My name is Layla. I'm a Partner Success Manager for the Fintech and Insurtech verticals in Singapore. And it's my pleasure to be your host today. On behalf of the Plug and Play APAC team, we're really excited to have you at our Expo today. We will start off today's event with an overview of our Fintech and Insurtech programs and announcement of our newest Insurtech corporate partner. After that, you'll hear from an upcoming Insurtech unicorn from India in a fireside chat about what it's like running an Insurtech unicorn in Asia. You will then hear from our latest batch of Insurtech startups, who will be sharing with you more about their solutions. So buckle up for this fun ride. To kickstart the event, I would like to invite Kayvon Delta, Director of Fintech Insurtech and Health Tech verticals of Plug and Play Singapore, to give you an overview of our Fintech and Insurtech programs, and also to announce our newest corporate partner. Kayvon, please.
Hello everyone, and welcome to our Batch 6 Fintech and Insurtech Demo Day. My name is Kayvon Deldar, and I'm the Director of our Fintech, Insurtech, and Health Tech verticals here for Plug and Play in the APAC region. Fintech and Insurtech were launched globally for Plug and Play in 2014 and 2016 respectively, and since then we've expanded to over 15 locations around the world. We launched here in Singapore over 3 years ago, and since then, we've done 7 accelerator programs and accelerated over 130 startups here in the region. Our thesis for launching this program in mid-2018 was to eventually become the epicenter for financial services innovation in Southeast Asia. Since then, we've kept true to our goal, both in terms of working with industry-leading corporations, as well as investing in the most interesting financial services startups at an early stage here in the region. To date, we worked with over 10 corporate partners, including our current corporate partners, which are MSIG, Tokyo Marine, Cathay Financial, Aflac, Swiss Re, NTC Income, Krung Thai Bank, AsiaPay, Asian Development Bank, and our newest partner that we'll be announcing today, Prudential. We've also made 6 investments in early stage startups so far since we've launched our program, and 3 new investments have been made this year. Of the 3 investments that we made last year, most of them have gone on to raise follow-on funding for Series A this year as well, which is quite exciting. Thank you for joining us today at our summit, and we hope that you enjoy the show and are able to connect to our program startups afterwards. And now, I'm pleased to introduce Edmund Lim from Prudential Corporation Asia, who will be announcing their new plug-and-play partnership.
Hi, my name is Edmund Lim. I'm from Prudential Corporation Asia. We are very excited to be joining Plug and Play as your corporate partner. We are looking forward to this exciting journey to meet many interesting startups in the health tech and fintech sector. Thank you.
Thank you, Kayvon and Edmund. And we are indeed excited to have Prudential join us as our newest corporate partner. For our next segment, we'll be having a fireside chat hosted by Kayvon. He'll be speaking with Varun Dua, the founder and CEO of Echo, an upcoming insurtech unicorn on the topic of scaling and sustaining an insurtech unicorn in APAC.
All right, hello everyone. We have an awesome guest for our fireside chat for our Insurtech Demo Day today. We have Varun Dua, who is the founder and CEO of Echo. For those of you that don't know, Echo is a digitally native insurance carrier based in India, selling products like auto, travel, health insurance, amongst other products. They've raised hundreds of millions of dollars to date, including recently announced a unicorn valuation led by General Atlantic and Lightspeed Ventures. Varun, it's an absolute pleasure to have you, and I'd love for you to start by giving a background of yourself and how that background led to starting Echo.
Thanks so much. Thank you for having me over, and I'll probably dive right into the background. So I've spent most of my career in insurance before insurtech was a word, if I could say that. I started my career with AIG in India when they set up shop in India. This was early 2000s, early to mid 2000s. Spent about 5-6 years there. Then had a job with in the mutual funds business for a while. But what technology could do to insurance was something that was always on my mind at that point in time when I was, doing my first job. So my first step after that, when I decided to sort of venture out on my own, maybe 2012, 2013, was to try and build software for insurance companies, because I thought they could do much better if they had the right technology, because I thought at that time they weren't investing in the right technology, in my opinion. So I set up a software services business, B2B insurance software sales, didn't scale too much beyond a point. We did well, but it was not going to break any ceiling in terms of what we were attempting to do. That same company then pivoted into saying, hey, we need to talk to the consumer. I think enterprise software is not really pushing that innovation layer, what we thought it could push. I set up a digital brokerage company, or a comparison marketplace, if you want to call that, called CoverFox. During that, I ran that business for about 3 years, raised a bunch of capital, but I think something was niggling always as a doubt that, we're still not able to solve for the consumer in a very, very meaningful way. So for me, from my journey, it's just been one continuum of about 7-8 years, out of which probably Echo is hopefully the last one where we are able to make a dent. But yeah, so it's just saying, hey, how can we do this better? Can we be an enabler to insurance companies? Can we be a distributor to saying, hey, not cutting the ice, we should probably manufacture? So it's just one long 7-8 year continuum for me personally.
No, that completely transitions into my next question. And based off of your heavy insurance background of not only, as you mentioned, providing software to insurance companies, being on the broker and distribution side, I guess to dive a little bit deeper, what was your motivation in terms of overcoming the regulatory hurdles and the increased barriers for becoming a full stack insurance carrier, as opposed to maybe just still focusing on the broker and distribution side, which could be a little bit easier, but as you mentioned, it's not breaking any barriers. So maybe talking a little bit about the vision and why you set out to do this, let's say, harder path.
So I wouldn't say that, my aspiration on day one was to set up a carrier business, but I think the journey led me to believe over a period of time, and my conviction kept getting stronger, that until you play full stack, it's going to be a problem. If you look at it from product, distribution, pricing, fulfillment experience, ecosystem services around insurance. There's lots to build if you really want to deliver differentiated value to the end user. And the farther away that you are from doing all those things, and the more people that are involved or the more entities that are involved to deliver something, like, just for an example, to deliver something great on health insurance, for example, you need the hospitals to partner with you, you need the reinsurer to partner with you, you need primary clinics to partner with you, you need an actuary who thinks and underwrites and wants to stretch the boundaries of how it could happen. Now, if you're sitting as a technology service provider or as a broker, it's really hard to tie all of this up in a meaningful way, because you don't control a lot of the value chain, which is in disparate sort of pieces. Over a period of time, also I realized that insurance is there's not much value in the distribution space, or relatively lesser value. Let me not call it not much value, given the fact that the distributor kind of gets squeezed out between the manufacturer and the customer. And if you're trying to give options, and I'm speaking in the realm of digital, so let's say you're a e-commerce kind of marketplace for insurance, or you've got 20 odd carriers, 30 odd carriers in India, maybe 50 when you take the life side. Out of them, 10 are big brands which customers really want to buy from, and the rest of them are still sort of figuring their feet. So you're really sort of giving choices among 7, 8. Your supplier side on the business is just helping customers make a choice out of 7, 8 real options. So looking at all of this and looking at the kind of capital it takes to set up a carrier business, I think where I landed was that, hey, it's okay to take that one-time pain of actually figuring out how this would work in terms of the regulatory construct, the license, the higher capital requirements. But the control that it gives you in terms of genuinely focusing on pricing, products, claims experience, full stack is far higher. And I have come to believe this balance sheet light business, as tech startups like to do, is a misnomer. I have seen enough balance sheet light businesses burn 10 times more capital than balance sheet businesses. So I think the conviction in having that control led me to this point that, hey, we should own the stack fully and not be dependent on for product creation, servicing, any of these pieces.
Got it. And now that you are this full stack carrier that's making major headway in India, as from the recent announcements, as well as just the premium you've been selling so far, I'm curious what you look to for inspiration. Could it be the likes of like the Lemonades of the world that are in other markets? It could even be someone like your investors, which are Amazon, that has kind of made its entire business around customer centricity. Just curious to see what you're looking to build Acco from other models.
So I think there's a little bit of picking up the best from all of those places and applying it to the contextual, cultural, market maturity context that India is in, or we are in. I'm a great fan of Lemonade. I think what they've been able to do is fascinating in a market that's, I think, much tougher than India. India is a very, very underpenetrated market. 80% of people don't have insurance in India. So it's land grab. It's easier, compared to maybe in the US, where there is a Geico, there's a Progressive, there's an Allstate. These are fairly sophisticated players sitting on tons of data from many, many decades. Compared to the Indian market, which is relatively still agent, broker, physical world driven, product differentiation, data play, all that is not really fully played out given the maturity cycle. So I think in that world, what Lemonade has done is with that intensity and sophistication of competition, I think what Lemonade has done is very, very fascinating. Overall, I think Amazon's a big inspiration as an investor and as a partner that we've learned a lot from them. I think where Acco's landed, we've also taken inspiration from Jongan. I had visited them a couple of years back, just when Acco was a big get started. They've been used the digital ecosystem to create new products, acquire customers very, very quickly. So I think what we've tried to do is pick the best of what would work in our cultural context. But more importantly, at a philosophical level, I think I'm personally really inspired by the ability of Amazon to be, customer centric, and for the entire organization to speak in one voice, which is so customer focused, knowing their customer segments very, very well. It's hard to pull that off over 20, 30 years. But just knowing our customer well and which segment we're focused on and what protection needs are we really fulfilling is really the core for ACO. So, for example, for us, if I were to put a one-line statement as to how we are trying to solve it, is to say that, hey, there are about 150 odd digitally native folks in India, people in India, while we have 500 million people who are online as per population. There are about 150 million people who are actively transacting customers with consumption levels high enough to, now move into the insurance bracket. We want to be the protection destination for these customers. So we'll continue to solve for these customers, whether it's auto, it's home, it's health, it's travel, and picking that segment very, very carefully, knowing who your customer is, rather than saying, hey, I can do SME insurance because it's exciting or there's a big market there. I think that's not the direction ACO is headed in. And just knowing that who our consumer is, I think that's the focus area for us.
Got it. And on that note, I mean, I mentioned at the very beginning in the intro, a few of the products that you're sitting in, whether it's auto, which is a very significant part of your business. You talk about, I know you partner with like the likes of other partners for travel, and you recently launched health insurance as well. So why did you decide on those few products in the future? And as you just alluded to at the very end, how do you decide which new products to create as well?
I think our thinking has grown over the last few years, saying which I just mentioned, the sharpness on who our customer is. So if our customer is about, give or take, about between 30 to 40 years old, very few people in India would buy insurance in the mid-20s unless it's like a mandatory product like auto. And even car ownership in India tends to happen with income levels closer to late 20s, early 30s. You wouldn't find a lot of 25-year-olds. They'll probably be riding bikes, but not really owning cars. So I think for us, the 30 to 40 digitally native population is the core. And that's really the segment. And over a period of time, our choice of products on what we do really depends on what need we can fulfill for them. So if I look at that consumer set, they have 4 to 5 protection needs. One's auto, one is health, one is life insurance, there is home, and then there are smaller sporadic needs like travel and gadgets and trips, and which are maybe small ticket size products, more contextual, at point in time use rather than recurring long-term relationships. But that's really the protection basket for these customers. So our attempt has been to complete this protection basket. And then we don't make a distinction that, hey, are we a direct-to-consumer player? Are we a partnership player? Or if you're buying a mobile phone and you need to cover it, then probably I'm better off being present where the mobile phone is being bought. And I don't expect that customer to come directly to my website or my app and buy. So for us, the choice of channels and the choice of products is really dependent on how many people have multi-product relationships with us, and what's the best channel to reach them for that particular product. And then the upsell anyway starts to happen. So for example, auto, we thought direct to consumer makes a lot of sense. So that's the channel that we took. But now as we've launched health insurance, we have a good 5-10% of our auto customers just now being comfortable with the brand and trying to buy products which ACO has launched because they have faith in our delivery and our experience and so on and so forth. So I think our choice of products and channels is really focused on, can we get 3-4 million people, 5 million people, 10 million people in India to have recurring 20-year long-term subscription relationships with us across all their protection needs? That's the North Star goal. To get there, every protection need we will try and fulfill either by partnering or going direct or going through employers, but keep the consumer segment the same.
Got it. And the last part in terms of the carrier journey that you've been on is, like I mentioned to you previously, I would normally ask this question to like large incumbents or large insurance companies, but now that you've become a unicorn and quite mature in your own right, how do you view keeping certain capabilities core in-house or buying or even partnering or doing a commercial agreement with another, let's say, startup or another organization to add something to your value proposition?
I think one thing I've realized more as a founder rather than anything to do with InsurTech or the space that we're in is that once you attain a certain size and scale, it's difficult to do everything. It's difficult to take completely new completely new bets. You're a running engine. You need to continue to innovate. You need to continue to deliver to your customers. So for us, over a period of time, we've really thought about what's our buy, build, partner kind of framework. So for example, on the health insurance side, if I need to have OPD capabilities, which are very core to me, the outpatient capabilities of diagnostics and delivering products in the OPD space to users. These are capabilities, I think, that have been very well solved by a bunch of other startups in India, at least in the context that we live in. If we were to try and do that from scratch right now, I don't think we'd be adding much value or doing something meaningfully different, at least in the near term. So in such a situation, my framework or the team's framework becomes, hey, can we partner or buy? Because we don't think that what we would do is probably 10x better. It'd probably be marginally better. And does it save us time? Can we get an aligned team or an aligned partner to be able to build that out long run? The distinction between buying and partnering is a alignment of, economic incentives. If we do feel that's a very core capability, then we would like to buy it, because partnering, if it's just another value-added service that we want to provide to our customers, I'd love to, partner. I think core capabilities across core technology, pricing, these are places that we try and build, as much as possible. And most of the partnerships are based around providing additional ecosystem services or getting some core capability, which will take us very long to, build out. But something that's core to insurance, that really solving the risk pricing, really solving the reinsurance stuff, really solving the distribution model. So distribution and pricing and claims experience, these are three things that, we don't typically would want to partner or outsource or work in that system. But if there's a core capability which somebody's done better, we'd love to sort of, see if we can do an inorganic route there. But there's a lot of ecosystem of periphery services and capabilities, I think, that can make our product stickier or open up more monetization in the long run, or get just pure customer love. Those are areas that we try a little more inorganic partnerships or acquisitions.
Got it. I do want to switch a little bit of gears here and get a little bit philosophical and pie in the sky. And I'd love to hear about kind of your vision or thesis behind the future of insurance, and of course how ACO is looking to drive that future, let's say over the next 5 to 10 years, and how that's going to change. And not to put words in your mouth, but I think in particular, you've definitely been market leaders in kind of distributing and educating and bringing insurance to the younger generations, as well as you mentioned, partners and integrating insurance products where the customer is buying those products. So in terms of embedded insurance and those distribution partnerships. So those are a couple of things I was thinking about, but broader, I would love to hear about your vision for the future of insurance.
So this is an interesting one. So today we try to cater to the category of insurance. So if the customer has a car or a gadget or an appliance or is about to travel, so it's attached to something else, right? So maybe health and life are two pieces which customers make a choice for themselves. So you really solve category by category, and you're still in the education zone. So if I were to tell people to cover their gadgets or appliances, if I'm not contextually present at the point of sale, it's hard. I'm not saying it's impossible, but it's hard, because people still probably wouldn't take this as a meaningful decision. Maybe health and auto they would, but this wouldn't be a very meaningful decision unless contextually very convenient, for customers to do. So while we solve for categories and channels and what's the right place for customers to buy and experience, I think for me, the future is, as more and more education happens, it should be an invisible product. It should be a product which is, we need to move away, I think, at least as for retail customer. I'm not saying that this works for the whole gambit of insurance, whether it's logistics or aviation, or like there's a whole different world of insurance out there. But as far as end consumer concerned, I'd love a world where everything's just a subscription, just one subscription built on the consumer rather than the product. So saying, hey, you pay me X $100 a month and you keep moving coverages between life, auto, health, gadgets, home warranties. Your home is always on. You have always on warranties, always on insurance. And so it's like a protection subscription. if and maybe once in a couple of months you come and toggle your coverages because you have a new car, or but that it doesn't have to be so product oriented, hey, let's solve auto. Because when you flip it and you look at it from a consumer lens, really, how many of us really want to spend time as we're excited because we operate in this category and we see it as innovation and some cool stuff that we're doing. But when you look at it from the consumer lens, I don't spend my time on insurance. I'd love to browse a fashion website or e-commerce, or I want this to work, and I want this to work predictably and just feel protected, right? But I don't want to spend time on it. So if you could deliver that experience where people could just get a card on file and then know they're always covered and they don't have to bother about it, I think that's really a world that we would like to solve for. I don't know whether it ever happens, but at least as a consumer, I think people don't like to spend time on insurance. And if we can just make it invisible, put it on file, everything's covered, toggle it once in a while as you need it, I think that'd be a great place to be.
No, it's definitely interesting in terms of the subscription model, and it does make a lot of sense in principle. I guess as a follow-up to that, and as you mentioned, like people tend to not care, especially the younger generations tend to not care about insurance that much. So in terms of like go-to-market, or in terms of attracting them, and in terms of even educating them on the importance of it, because as you mentioned, a lot of products aren't even mandatory, right? Like
Yeah.
auto was. So how do you still overcome that barrier of one, reaching them, two, educating them, and three, getting them as clients across multiple products?
So I think one of the things that we've realized is that you don't need to win the world. You need to win, a certain set of customers. So for us, the way we look at it is about 150 odd million people who are transacting online. That number continues to grow. Can we get 5 million people out of the 150 million people to have who we've been able to convert, create the awareness, build into long-term multi-product subscription relationships? That's a pretty large business. That's like a $1,000 to $1,500 wallet across 5 million people. You're talking about a 6-7 billion recurring revenue company and compounding, right? In some sense. So it's not like we need to win the world in one go. But I think if I look at it in the next 5 years perspective, again, I come back to the same point. Choosing that customer segment well is very, very critical. The people, you can't educate the whole country, or the people with different income levels, education levels, life stages. So I think there's a very specific cohort that you need to solve for to build a reasonably big business. Post that, I think it gives you the option value of how do you want to continue to educate and get more masses in, but if you try to solve it in one go, I think it's really hard. So for us, the way we've gone about it is one of the businesses which we took inspiration from Jongan was to partner with 2030 digital platform where these consumers regularly are, either on e-commerce or on an Uber or Ola or a food delivery website or app, and just be there. So they constantly see us, they constantly get to hear about ACO, see, hey, this is contextual, this makes sense. If I'm taking an Uber or an Ola and my flight gets delayed, I get covered. So it's just one click. So I think just that converting that into an impulse rather than a thought through long-term insurance decision is to me one way of educating. So if you get a user who's got his claim for a missed flight or for his gadget he contextually bought it almost impulsively. Really, he wasn't looking for it, but because it seemed convenient and logical at that point, he just like, okay, maybe $100, no problem. I'll just press a button. And if something happens and you deliver well, that's when he says, hey, this seems to be working and it's not so bad. So I think there's various ways of education. One is, of course, mass media advertising to stuff like this. But what we are trying to do is just focus all our advertising effort, education effort, reduce cost of trial for younger customers. You don't have to come and buy a $300-400 product from me. You could buy a $1 product from me and just try me out. So reducing cost of trial, being omnipresent, some direct to consumer advertising, but all of it really focused on those, certain set of customers. That's how at least we are going about it.
No, it makes a lot of sense. And thanks for elaborating that further. And to close, I think we have one final question, and a lot of these have kind of been more corporate-oriented questions, but I would love for us to spend some time for you to give kind of advice to the next generation or the current generation of insurtech startup founders that might be listening to this. You've certainly gone through your trials and tribulations over the past 5 or so years, building Echo, or even previously at CoverFox and other initiatives. So wondered if you want maybe give some top 3 pieces of feedback for maybe specifically within InsurTech for startup founders. It could be dealing with regulators. It could be, as you mentioned, finding that right target customer, but any kind of key learnings, key mistakes you might have made, and knowledge you'd like to impart to the startups in our audience.
So I think the biggest learning for me, and I'm just flipping it a bit, is been that the fundamentals don't change ever, right? So I think whether it's InsurTech, FinTech, whatever it is, we tend to, as a community, and I'm calling ourselves a community who really believes that technology will change every category, every sector over a period of time, and are trying to innovate in that front. Really, sometimes get I'm probably using wrong words here, get sucked into the technology and the innovation part of it, and forget the fact that who owns the customer relationship, who owns actually who owns the relationship with the customer. Is it the carrier? Is it the distributor? Is it a regulated part of the business? Is it an unregulated part of the business? Whoever owns, I don't care whether any advice to founders would be, doesn't matter whether you're regulated, whether you're an MGA, whether you're non-MGA, you're a full stack or you're a distributor. I think who owns the consumer relationship, who owns the frequency of interaction with the customer, who finally delivers the service to the customer at his point in need when he's, and what's the experience that's happening there, will define the long-term value of the enterprise that you're building. So I think the decisions of whether to be regulated, whether to sit outside, whether to be an enabler, whether to be an API player, all of it really depends on what you're solving for. So for me, it was very clear that whoever owns the customer relationship, whichever brand the consumer loves, whichever brand delivers whichever entity rather delivers a great experience, will probably capture the max value. There is value to be captured in interim value chains, to be an enabler, to be a distributor, and so on and so forth. But then you need to know which game you're playing, because the final big value will get captured by the guy or the entity who owns the consumer relationships and delivers that experience. And that's who the customers recognize. That adage will not go away. It doesn't matter whether it's FMCG or insurance or whatever it is. So my learning has been, we tend to kind of sometimes get channeled into the innovation rather than the core principle that if you own the customer relationship, you'll win. So that's my sort of very philosophical advice. I don't think regulated, unregulated makes too much of a difference. It's just at which piece of the pie are you after.
Awesome. Thank you for the words of wisdom there. And with that, I will conclude the fireside chat. I would love to speak with you for hours and hours more and asking more questions, but that's all the time we have for today. I'm looking forward to hearing the great updates that you guys have in the future. I'll be watching from the sidelines, but thank you for joining us today.
Thank you. Glad to be here. Thanks.
Thank you to Varun and Kayvon for the insightful discussion. Moving on to the next segment of our event. We're inviting startups from the current batch of our InsurTech program to share their solutions. These startups have focus areas in claim automation, customer experience, agent management, API, and digital platforms. First up, we have Claim Genius. With its headquarters in the US, Claim Genius aims to make touchless aims a reality. Please welcome Raj.
Good morning, good afternoon, good evening. I'm Raj Pofle. I'm the founder and CEO of Claim Genius. We are focused on automating the overall claims process for the passenger vehicles. Right now, as we know, there is a significant delay in doing the assessment on the vehicles. It takes about a couple of days, couple of weeks in some cases. That costs a ton of money and a time for the insurance carriers. And that's exactly the area that we are focused on by using our computer vision deep learning product. We are trying to bring the efficiencies that makes the claims process as much as touchless as possible. Beside the insurance carriers, any of the vehicles on the road that is today, it goes through an inspection cycle at some point of life cycle of that vehicle. whether you're renting the vehicle, whether you're leasing the vehicle, whether you are selling the vehicle as a used car, or even after the total loss vehicle, the recyclers wants to inspect the vehicle. So the technology stack that we have developed, it can be used for the vehicle inspection across the automobile vertical. And that's the kind of an opportunity that we are focused on. We are very much focused onto the insurance area. That's where the need is the most at the moment. So what we do, whenever you have a claims to report or the claim assessment needs to happen, we provide our services to the insurance carrier through our mobile app that guides the customer or the field adjuster to take the pictures of the vehicle or shot the video around the vehicle and upload those pictures or the video. And that's all they need to do. Rest of the job is being done by our AI platform, which is a cloud agnostic platform. We identify all the different parts, the external and the internal parts that is visible into those pictures and video. We identify all the type of the damages and give you the analysis or what you need to do for that vehicle. So the initial assessment, it happens literally within a minute and a half. You save hours and days that you spend on this annual assessment. It happens literally through our AI platform in an automated way that gives the carriers the triage making decision faster. They can immediately decide whether this vehicle needs to be repaired and whether it needs to go to the garage or it is a total loss and it needs to go to the auction yard. They can settle that claim with the customer. The digital experience that the customer is getting is great. On the top of it, the insurance carrier who are basically seeing the benefits in saving the time, saving their cost over 60-70%, getting a good insight about their cash reserves, right? Reducing overall cycle time, reducing the manual touch for this assessment, and get the best ROI out of this platform. We are able to basically automate almost 75% of the volumes in a different category of the claim, whether it's a minor damage claim or to the major damage claim. Many differentiators that we have developed is giving you the insight about what's the internal damage for that vehicle. That we cover in our assessment. We have partnered with many of the estimatic platforms across the globe. In US, we are partnered with Mitchell. In Europe, we are partnered with Schwake or AutoVista. In India, we have developed our own customized digital product catalog. So we can basically provide the cost estimation for all these vehicles in the different part of the world. And now we are basically scaling our operations even into the other geographies. We have about 120 people. Technology Development Center is in India. We are headquartered in New Jersey. Now we are scaling up our team in US as well. We have raised about $13.8 million since our inception. We just closed our A3 funding round for $6 million. We are scaling very fast. We have got a very experienced and professional team on the executive management side as well as the technology side. I'm a technologist by nature, have over 23 years experience in the technology, worked with many financial firms on the Wall Street. We are partnered with many of the multinational technology firms like HCL, TCS, Cognizant, Ernst & Young, Genpact. Everybody wants to integrate our product with their offerings and bring a value proposition to their customers. So that's about Claim Genius. Thank you so much again for giving this an opportunity to present ourselves. Have a good day.
Next up, we have Yours, a startup with its headquarters in Singapore. Yours is an online digital middleware insurance platform built on modules in sales, underwriting, pricing, and claims. Please welcome Nitin.
Yours welcomes you to the APAC Summit at Plug and Play today. We'll be sharing some of our implementations of our new insurer middleware platform. We are successfully driving digital transformation for some reputed brands in insurance and partners across the globe. We are certified Insurtech in Singapore and have been approved funding from MAS. Yours New Insurer is a middleware platform that enriches your current capability, providing immediate return on investment. We do not replace what you have, but supplement it. Built on a modern tech stack with open interfaces for each of the 10 modules, which are white labeled with a strong foundation but flexible to suit your requirements. These modules can be implemented within 4 to 8 weeks and deployed as SaaS or on-premise as requested. Let me touch on some of these modules at a high level. SalesPoint module consists of distribution portals available for all channels, direct and partners. They are mobile responsive, multilingual, and multi-tenant. Products out of the box are 12 in general, 2 in life, and 2 in health, plus an underwriter portal managing in the back end. All products come with customer journeys, underwriting and pricing rules, as well as policy documentation. In Singapore, we saw 15x growth in revenue in the first year, a 60% reduction in customer acquisition cost, and a 5x growth in channel partners. Our Insurer Wallet offering is a super app for engaging with direct customers and partners. Functionally, the app can do the following: new business, claims, servicing, act as a digital vault, provide value-add services in real time, act as a marketplace to cross-sell and upsell, as well as be used for captive advertising and personalized promotions. It is implemented in many countries, and the usage-based on-off feature, top-up cover using barcode at retail outlets, benefited one of our insurers in seeing an 80% increase in customer engagement, a 90% reduction in processing costs, as well as a 10x growth in revenue. In Singapore, our bot API is embedding personal accident insurance via coffee kiosk. The implementation is first of its kind and is driving the on-the-go buying insurance behavior and simplified consumption in 3 clicks, 1 screen, as simple as buying a cappuccino. Soon to be deployed in all train stations and the airport in Singapore, and then off to Japan. Next is our instant claim module, which allows touchless straight-through processing. Today, this framework is offered for travel trip delay, where the claim is automatically lodged, adjudicated, settled, and paid out in real time to the customer. Insurers are very keen to leverage this for other lines of businesses, where we see high volumes and low-touch claim cases for routine claims. Our insurers see an 80% reduction in claim costs, 90% increase in brand repetition, as well as 5x increase in customer satisfaction. Auto Underwrite enables complex products in life, health, commercial, and general to be underwritten instantly. Our insurers have observed a 91% effort savings from underwriting team. That is, the complex medical policy, which used to take 23 underwriters and a turnaround time for 3 days in offline mode, now with Auto Underwrite in place, is down to 2 underwriters and processed within a minute. This has also enabled for digital distribution for this insurance policy via B2B2C and expect potential 2.5x growth in first year. Last is dynamic pricing, which leverages large data sets and machine learning and is engraving customer behavior into the actuarial model. Out of the box, we cover a generic framework applicable to various products and a repeatable design pattern for implementation. Expect tangible benefits are 30% more profits, 40% more customers, and 1.5x more NPS score. With a background in insurance and technology, we are ready to partner with you. Get in touch with us today. Thank you.
With its headquarters in the US, MoEngage is an intelligent customer engagement platform built for the user-obsessed marketer and aims to enable hyper-personalization at scale. Please welcome Kaushal.
Hi everyone, my name is Kaushal Dwivedi. I represent MoEngage. MoEngage is a 7-year-old startup, and the platform enables hyper-personalization at scale across multiple channels like mobile push, email, in-app, web push, on-site messages, and SMS. With AI-powered automation and optimization, Brands can analyze audience behavior and engage customers with personalized communication at every touch point across their lifecycle. More than 1,000 plus brands across 35 countries use MoEngage to send 50 billion messages to 500 million consumers every month. We are recognized by Gartner and Forrester as a leader in the intelligent customer engagement space. What MoEngage offers to the companies like you is to help your marketing team execute omni-channel personalized marketing campaigns. So on a single platform, MoEngage offers marketing team the ability to analyze customer behavior. That means if you want to know what is the purchase behavior of your app user, based on that analysis, you can come to know how many people are there who regularly shop using the mobile app. Now, if you want to create a segment of customers who want to do something specific using the app, you can come to MoEngage, create a segment of customers who meet that particular criteria. And you can also create smaller niche segment that you want to focus on people for those campaigns. And once you created this very small niche segment of customers, you are able to send out marketing campaigns across all channels. So you can execute all those campaigns on MoEngage. And finally, you can optimize those campaigns if you want to know what's the best time to send, what's the best channel to use, what's the best content to use. We have AI capabilities to help you do that. And finally, when your customers read the message can be personalized by their interest on the product that they have seen, region, or any other attributes that you have captured about them. So, MoEngage helps your marketing team do a range of marketing activities to deliver omni-channel personalized campaigns. Here is the architecture of MoEngage platform, where MoEngage platform is able to analyze the data from different data sources, could be mobile apps, web, or even partner integration or any offline data. Then it processes all the behavioral, demographical, and geographical data into single view of customer on which the analytics can be run, which can generate trends, funnels, cohorts, session, and sources. And there are other marketing automation activities which you can do through these actionable analytics on these different channels. It could be app push, it could be app inbox, SMS, web push, or on-site messaging. There are many organizations which would want to have decision improvement by connecting to any other BI tool with open analytics. That is also feasible here. This could happen through Tableau, Data Studio, Looker, Click, or Redash. In past 7 years, we have been able to win confidence of close to 900 plus customers across the globe, in different verticals, and having different use cases, which could be driving adoption, user retention, or any other specific use case which we have run for these customers. And our customer comes from both disruptive new age customers to the traditional enterprise customers. The reason why we should connect, if you are seeing increased web visits to your platforms, to your websites, but there is low conversion. If you want to actually predict consumer behavior or customer behavior through our predictive module, which is our latest feature, we can get connected. If you feel that your marketing team cannot execute as many campaigns as they want to, if your marketing team cannot leverage the data in real time to personalize experience, so in a nutshell, there are millions of customers with unique needs, likes, and preferences. MoEngage helps engage your customer with the right message at the right time on the right platform. Thank you so much for hearing me out. Let's get connected. If you have any further question, please do reach out to me. Thank you so much for your time.
Also headquartered in the US, Parked is a platform that unlocks dual value engagement between insurers and their customers by allowing insurers to buy certified mileage data directly from their customers. Please welcome Elon.
Hi, I'm Elon, co-founder and CEO at Parked, and today I'm going to introduce you to our platform that allows individuals to monetize their data. We all know the problem today, that we are the products of our data, and you're left with very extreme options. One is to throw your hands up in the air helplessly and accept the fact that everyone is making money off of your data. Or alternatively, never go online again and move up into the mountains. Well, we believe that there's a better way, and Parked platform allows individuals to be in control of their data and to make money from it. Now, before you ask, what the heck are we doing at an InsurTech pitch event? Let me explain. In order to get this concept off the ground, we need to start off with a specific data point that is valuable and unique. And to do that, we work with insurance companies, and within that, auto insurance, and we are focused on the data point of mileage. This is a very important data point because it is difficult to capture, and it is a #1 risk indicator of your likelihood of a claim. Your options today as a consumer are similar to your general data, which is full tracking and you don't have any alternative, or self-reported and it's not really trusted. And what we allow is, instead of the insurers purchasing this information from third-party providers behind the customer's back, we allow them to engage and purchase it directly from their customers' certified legitimate data, in this case specifically, the mileage. Insurers love working with us because we provide real dual value engagement. What better way is there to engage your customers bi-monthly or monthly than giving them cash? Who doesn't like that? It's better data for your pricing. It allows you to improve your overall retention because consumers are finally getting customized monthly policies. And uniquely, it unlocks an affordable pay-per-mile option. Keep customers on their existing policy, and in addition to paying them for the data point, you can reward them if they happen to also be low mileage drivers. And most importantly, this has been seen to be a tool to attract new customers. We are growing every single day and acquiring customers, new customers, for less than a single Google AdWord click for insurance. Consumers, on the other hand, love working with us as well because they don't need to change their policy. They work with existing partners that we have and decide to self-report their information and stick with their existing policy. They earn money every month. Very transparent model, easy to understand. Before they check in and provide their monthly data, they know exactly what they're going to get paid for it, and they're in full control of their data. Our platform is a one-stop, out-of-the-box solution where we provide the AI models for fraud detection, which has been certified already. We have reporting either via a secure back-end dashboard or API integrations. We provide all of the customer support and the individual payouts so that you don't need to go and hire additional staff. We launch with our partners within 2 weeks. These are some screenshots of what the app looks like. It's live. Users are enjoying it every single day. You can see that they have a rewards page where they can see all of the rewards that they've earned, what is pending, and what is the unique model for that specific partner that they're selling their data to. They can see a full timeline of every event that they've done, what they were paid for it, and of course they can see their vehicles and the pictures from the cars and the odometers and all the other information that they've added in terms of how many miles they're driving every single month. Ultimately, Parked unlocks a transparent, fair, and simple model, transforming the ways that customers and insurers interact because it's aligning their interests. The founding team consists of myself, Dotan Raz, and Guy Laor. Together, we have the experience of building secure end-to-end platforms and marketplaces. And in terms of where we are today, we're actively working with 2 of the top US insurers, and we're launching with the top UK insurer as well this quarter. We've raised 2 pre-seed rounds and look forward to speaking with everyone today. Thank you for the time. Have a great day.
And now, hailing from the Netherlands, we have Surfly. Surfly is on a mission to innovate online interactions with their flagship products, including universal co-browsing, video chat, and real-time e-signing. Please welcome Tarek.
Hello, greetings from Amsterdam. Welcome to APAC Summit. My name is Tarek from Surfly. Surfly is a seamless and secure collaborative layer that instantly adds co-browsing, video chat, document editing, and e-signing capabilities to your existing customer journeys and platforms without the need to write a single line of code. Now, I'm not going to show you lots of slides today. You've probably seen lots today, and I want to show you how it works. But before we begin, a little bit about us. Our mission really is to innovate online interactions, and we've grown incredibly quick through the pandemic, from just 9 people to over 41 superstars. We also work with 300,000 agents and advisors globally in leading companies. Our main value for insurance is around improving distribution and onboarding, turbo boosting your customer experience and your NPS, driving digital adoption of your customer and agent portals, as well as humanizing the claims experience. Now, as you can see here, we're tried and tested by some of the world's leading insurance companies, where we drive immense value, which we look to replicate for all of you in the audience too. On the bottom right of the screen, you can see a QR code, which if you're quick, you can scan and get you access to lots of use cases, as well as 30 days of free Surfly. But let's jump into it because it's really, really exciting. I'm going to minimize this and I'm going to show you what's behind here. Now, on the left, we see our application, but we've taken MSIG logo and we have a nice picture of Marina Bay. Our platform is fully API first, so you can embed the experience into a CRM, into an insurance e-app, into a contact center platform, you name it. On the right-hand side, we have the MSIG application, which is literally their existing application, which I haven't touched. Look, I've pressed refresh this to show you. Now, what we're going to do is I'm going to add a few lines of code to this experience, and you're going to see a Get Live Help button. Now, there's different ways to start it. An agent can send a link via WhatsApp, WeChat, email, who cares, to a customer, or a customer could be on a portal and need some help. Maybe they're connected with the agent, maybe they're not, but the customer clicks on this button, which can be customized. And as you can see, this isn't a Teams experience or a Zoom experience. It's a fully branded, respected, and trusted experience of MSIG. On the left, the agent would have a queue, which is fully API first too, which they can take a call, or if they're already on the phone with the customer and wants to help someone on the site, they ask the customer, what's your code? And the customer says 3678. They enter that, and as you can see, as if by magic, we are instantly connected on a Surfly session. Magic. The agent can then upgrade that further to a secure video chat with one click. The customer can as well. And they can zoom into the experience and zoom out of the experience. And as you can see here, it's fully responsive, and we can go anywhere now within this environment. We're not sharing the screen, because if we were to go to Facebook, for example, the customer cannot see the Facebook. They can only see wherever the agent is on the application. We can add more people into the session. Maybe it's a husband needs to bring his wife into the session to talk about the life insurance. We can invite, as I said, by email, SMS, WhatsApp. We can then give the control to the agent. The agent is now in control, so a much more interactive session. And the agent is then able to even share documents into the session, as I'm doing now. Once that document is uploaded, we can fully annotate the document and e-sign in real time, as I mentioned. As you can see here, we've got a sample form. We can point things out. And when it comes to e-signing, the customer can insert their e-signature, or the agent can insert their e-signature, shall I say first. And then the customer can also choose to insert their e-signature just by giving that control back to the customer. And the customer can then, as I mentioned, sign that document as well. And both agent and customer can download it and proceed to a payment portal or whatever. A quick, brief snapshot of what we do at Surfly. There is really so much more we can go into. We have a full audit log API, which can really help. But that's a bit from Surfly. I hope you enjoyed it, and I'm here to take any questions, or come and find me at the networking area. Thank you very much. Have a nice day.
Coming up next, WeSurance is a startup headquartered in the UK. WeSurance aims to help insurers build a faster, smarter, and simpler way to run their business for today and be prepared for the future. Please welcome Stephen.
Hi, my name is Stephen. I'm an analyst here at WeSurance. Here at WeSurance, we want to help insurers in 3 particular ways: to imagine and help realize their new product ideas, to create those products easily and accessibly, and lastly, distribute them out to the market through your various different sales channels. Here at WeSurance, we want our users to not be limited by technology, time, or cost. And this is why we've created our out-of-the-box solution, which provides a number of different features and tools to help you digitize your customers' journeys. Insurers, like all businesses, simply want to increase their revenue. However, even with great new business or product ideas, the implementation can take up much of an insurer's time and costs. WeSurance DTX is the name of our SaaS platform, which can help you to digitize your customers' journeys. We provide unlimited technology so that you can have unlimited business. This means that we can adapt and change to any of your needs, whether that be changing your new payment gateway infrastructure, or increasing your number of sales distribution channels, or creating new APIs to work with your different digital channels. DTX works as an extension to your existing infrastructure. It does not aim to replace or change or alter any of your existing IT infrastructure, meaning it can work alongside it. And we do this through relying on the use of subdomains. WeSurance DTX includes 2 key solutions: Accelerator and Vouchersurance. Accelerator refers to speeding up the product creation process, meaning reducing that usual time of several months of development to a matter of days through a no-code approach. A key part of this is called the product configurator. There are a number of fully customizable pre-made templates so that you can create any new insurance product you so wish, and also match them to your existing website style and design. By breaking down the various different steps of the product creation process, it means that we have the flexibility to work to provide any type of insurance product. Meaning, if you're working with an insurance product with a range of complicated underwriting questions, these can be added in when necessary or removed when necessary. WeSurance DTX can work with any type of general insurance or life insurance, as no product is too complicated for us to handle. This here shows the opening page of what it would look like for the product configurator when choosing what type of product to create. So you can change the graphics, the title of the product, the details of the product, whatever it looks like and feels like for the end customer. The second solution is called Vouchersurance, and this is about making insurance more versatile across your various different channels. In order for the product to work across eVouchers and Vouchersurance, the product must have been created in the previously mentioned product configurator, which allows for the API to be automatically generated. This API is what allows the insurer to be notified when the eVoucher product has been bought from the e-commerce third-party partner. This means that using the Vouchersurance solution, you can increase your number of channels beyond those of the well-established use of brokers and agents to now also work with third-party e-commerce businesses. On the left here shows the redeem portal, what it would look like for the end customer when they wish to redeem their e-voucher. And on the right here shows the Vouchersurance portal and what it looks like for the insurer to manage and keep track of how many e-vouchers and Vouchersurance solutions have been offered. We're currently working with AXA General Insurance Hong Kong, and they've adopted this e-voucher solution so they can work with new third parties, increasing their ways of lead generation and increasing their overall customer base. To sum up, we believe our users should not be limited by technology, time, or cost. You can spend more time on focusing and delivering your business initiatives. Let us help you build your digital business and remove those technological barriers so you can extend your digital business today.
Next up, we have Jam, which is headquartered in Singapore. Jam aims to help insurers price auto insurance more accurately through their AI-powered dashcam in consumer vehicles. Please welcome Guy.
I'm Guy, CEO and co-founder of Jam. Here at Jam, we use AI to analyze drivers in real time, predicting the likelihood of them having an accident on the road. We use this prediction to then de-risk them by playing games with the driver, giving them a fun and engaging way to become safer as they drive. We trade this data with our insurance partners, allowing our insurers to price policies in new and unique ways, benefiting both the driver and the carrier themselves. Some of our carriers say we improve their profit margins by as much as 30%. So what we do at Jam, which is completely unique in the world of telematics, is we're using the video to understand, through computer vision AI, how the driver is making decisions. And this is completely new, because the previous generations of telematics, what they've managed to achieve is to just tell you mechanically what the driver is doing. They'd be able to see that I'd slowed down, but they'd never be able to see why I slowed down. And the unique thing about a Jam is this kind of contextual understanding of the scene around me. And so imagine the two different stories here. Someone drives up to a busy intersection and then they slam on the brakes because they missed the traffic light, right? They just didn't look at it fast enough. And that's obviously not great. And if that person is doing that over time, it's going to be a very strong indicator of risk. It's a very different story if another driver pulls up to an intersection and, kind of like this, it's a busy neighborhood, and exactly like the scenario, there are people here trying to cross the road, and I slam on the brakes, which I haven't done if any insurers are watching this, and I slam on the brakes very, very late because I failed to recognize that those pedestrians were crossing the road. And that's a problem, and that is detectable with a Jam. Similarly, if I do slam on the brakes, other factors come into play here. Did I recognize them well in advance? Am I aware? Am I a safe driver in handling the vehicle? These are questions Jam can answer, and the data streams that we provide via Jam are easily accessible to insurers via dashboards and APIs to allow them to make pricing decisions on policies, as well as kind of like renewal decisions with drivers and how they want to treat their portfolio. They spend so much money on claims. Around $700 billion a year is spent on insurance claims by insurance companies. And knowing which drivers are likely to cause those claims will change what it means to be in the insurance business. And so we've seen a lot of traction with our current carriers who are super excited to be able to work with us because of the potential that we unlock to transform their businesses and their P&Ls. From a driver perspective, the same thing applies. There's never been a way really to actively coach drivers to become safer. No driver wants to have an accident. No driver wants to pay more in insurance premiums than they have to. And what we do with the drivers here is we give them games. And so for example here, if I have a bad habit of not recognizing pedestrians, our AI might challenge me through our app to basically, let's say, spot people wearing blue jumpers. And the faster I do that, the more points I get, and I can redeem that maybe at a Starbucks or a Coffee Bean Tea Leaf, and I can, maybe an insurance discount, I can get something tangible for it. We do care that the driver is put into a more aware state and is improving their reaction time to pedestrians, and this will make them a safer driver over time. In terms of our traction, we are live in Singapore at the moment with 3 carriers. And so we have drivers with us, they're buying policies through us, they're engaging with the Jam app. And we're super happy to see that they are engaging with the app very strongly. We have basically a 99% retention rate at the moment with our users, which is kind of great levels that we like to see. And we are looking to launch in the UK in Q1 of next year, which we're actively fundraising to support that launch as we grow. We're super excited to talk to people about kind of how they can help us as we bring the new version of telematics out to the market. hopefully we'll be able to see you guys on board.
We're wrapping up today's sharing session with Quintexa. With its headquarters in the UK, Quintexa is a pioneer in contextual decision intelligence, and it aims to empower organizations to make trusted operational decisions by making data meaningful. Please welcome Alex.
Hi there, I'm Alex Johnson from Quintexa. I'm going to talk you through how we're helping organizations reimagine customer intelligence through more context. Organizations historically have tried to make decisions with data that's stored in operational silos or incomplete systems and often dotted around across the organization. To effectively make decisions regarding customers, to help with the customer service and the customer journey, as well as the customer experience, you need to be able to connect operational, transactional, and external data together. And that's where we fit in. We're all about connecting data at vast volumes, enabling that connected data ecosystem to be able to join information around individuals, organizations, what we call party views. And with those party views, you can look to create more context around your customer. Who are they? Who do they interact with? What products do they choose? Who shares contact details or information with them? And where do they sit as part of their wider network? That can be used to remove silos between your business and understand your customer more effectively. So how do we do that? Well, on the right-hand side here, we see how the core fundamentals of the platform works. We have a schemaless data ingest, which means we can take data from any format from any system. That is both internal and external data sources, which we fuse together and use a robust ETL and data preparation framework to create a harmonized data layer across your ecosystem. Our dynamic entity resolution has proven to generate over 99% accuracy on creating a holistic customer view, and we've tuned this across 100 billion records. Once you've got that accurate view of your customer, your individual, the organizations you do business with, you can then use network generation and augmented network analytics to be able to understand connections between those individuals and organizations. We then layer that with a visualization exploration toolkit, as well as an open analytics framework, which allow you to be able to build predictive models to find insight in the behaviors and also to be able to visualize and explore the data. We're proud to be able to work with some of the largest organizations, including Allianz, HSBC, as well as Dun & Bradstreet as one of our core strategic partners. This can be used across the value chain for both insurers, banks, and other organizations. We can use our understanding to connect views around customers who sit across your multi-line portfolio or sit across different brands and different organizational units. We can use it for upsell, cross-sell, as well as onboarding and understanding how you price risk and also how you understand the risk that a customer may pose to you at application stage. We've also seen a strong use of our platform in both detecting and preventing fraud and financial crime. How does this augment your existing customer intelligence ecosystem? Well, you may already have master data management systems, CRM systems, or customer data platforms. We can sit at the heart and actually be an input and an output to those platforms. Through our data fusion, our entity resolution, and our graph analytics, we can serve up connected and holistic views of your customers to all parts of your business. This enables your customer interaction to be seamless, and it enables your data science and analytics to have a single and holistic, accurate view of all of the decisions that you need to make within your business. So we're Quintexa. We're about connecting data and driving meaningful insight for our customers, ultimately to inform trusted decisions. We're operating at a global scale, having deployed and served our customers in 70 different countries, and we're all about solving real-world problems through complex data. Thank you very much for your time, and I look forward to hearing from you.
big thank you to all of the speakers and startups for your sharing. Before we close the Insurtech Expo, I would like to announce the winner of our Most Engaged Mentor Award for the Insurtech program. The award goes to Cyrus Cruz. Congratulations, Cyrus. We're really glad to have you be a part of our program, and we look forward to working with you closely again in the future. Thank you everyone for tuning into the Plug and Play APAC Insurtech Expo. I hope you've enjoyed yourselves. If you'd like to find out more about any of our startups, please feel free to reach out to the Plug and Play team, and we'll be happy to assist you. Now, I'll hand the time over to my colleague, Kent, who will be your MC for our FinTech Expo coming up next.
Thank you, Leila. Good morning, everyone, and welcome to our PMP FinTech Batch 6 Expo. My name is Kent, and I will be your host for today. To briefly introduce myself, I'm the Corporate Partnership Manager for our FinTech, Insurtech, and Health Tech verticals in APAC. We're excited to have you at our Expo today, where we will be having a fireside chat about the institutional adoption of crypto and blockchain in Southeast Asia. We will then hear from our FinTech startups who will be sharing with us about their solutions. Next up, I would like to invite Kevin Lim, Director at Temasek, who looks after the blockchain team, for a fireside chat on institutional adoption of crypto and blockchain in Southeast Asia. So welcome to the FinTech Fireside Chat. Today, our topic is institutional adoption of crypto and blockchain in Southeast Asia. I'm Kent, Plug and Play's APAC Corporate Partnership Manager. And today we have Kevin, Director at Temasek. Kevin, would you like to make a quick self-intro?
Thank you, Kent, for the introduction. Hi, everyone. I'm Kevin here. I work in Temasek's blockchain team. So we are largely focusing on venture building and investing activities within the space. Very glad to be here today. Thank you.
Great to see you here today, Kevin. So let's start off with looking a little bit into the trend, right? So, Bitcoin is recently making a historical high of close to 67,000 US dollars. And with this up and coming, what trends do you see in retail and also institutional crypto adoption?
Well, to be honest, I think it's a mixed bag, right? So again, if there are balance between headwinds and tailwinds, if you're looking at what's happened since the fourth quarter 2021 to today, the large macro trends have been up, right? Both up in terms of pricing, both up in terms of the number of press announcements, news releases, and a lot of times the increasing amount of investor activity and interest within both retail and instis coming into the space itself. Now, for the retail side, I think it's difficult not to get inundated by news within the crypto space these days. And on top of that, it's a volatile, exciting new asset classes. It has the promise of making individuals a huge amount of returns if they were to place their bets properly, right? And it's exciting, it's captivating. From the insti, it's probably largely being led by the end investors, because investors have been asking a lot of their institutional fund managers and guys on the buy side, say, hey, how do we get a slice of the action? We may not be so sophisticated or may not have the time or the energies to be participating deep into the scene, but could you at least allocate a portion of your portfolio looking into this space? So I think even within the institutional world, it's been driven largely by the end buy side. And it's difficult to ignore what's been happening now. Obviously, there's going to be a range of activities, folks who are much more active, earlier stage involved within the scene, and folks who are more taking a passive portfolio allocation approach, right? There's been a blend of that. So with that as the backdrop though, I think what's also something we should not ignore is the fact that regulators have been making a lot more public statements about the cautionary issues within the space itself, right? So IMF has published a report recently talking about the risks and dangers involved in crypto. Bank of England have made public a speech that they're saying that the total volume cap within the crypto market is probably more than double the size during the 08-09 financial market crisis. And the recent news in China, where they have banned cryptocurrencies altogether, I think there's a range of activities from regulators where they understand that the market is getting very heated. And as I was saying earlier, the price asset is going to be very volatile. So you can't have a situation where they're just going to be sitting quietly by the sidelines, right? So as investors coming to the scene, I think it's important to also take heed of some of these regulatory actions because they may have significant impact on the pricing as well.
Oh, absolutely. And as regulation is ramping up around the crypto and the blockchain. As we all know, it's not just about crypto, and that is why the topic of today's discussion is institutional adoption of crypto and blockchain in Southeast Asia, because they are so closely interlinked, but yet we all know that they are slightly different. So we'd like to switch gear to look into Southeast Asia financial institutions, which include a lot of audience here today. Should they be FOMO about blockchain adoption? Beyond crypto, we have certain financial institutions in the region already opening up their crypto exchanges, but there are others thinking about just adopting blockchain for various operations they have. What are some of the best practices for them to get started on the blockchain?
So if I can summarize it, the best is frankly to just get your hands dirty, right? So the space is evolving and innovating at an unprecedented pace itself. And frankly, there are times whereby I myself am doubtful whether we're in the midst of a huge bubble that's being brewed, or we're actually looking at unprecedented innovation that's happening in scale, right? And it's difficult to make judgment calls on that front. So what I've realized is it's difficult to keep up if you're trying too hard to kind of pre-plan everything, map up a strategy as to what you want to do within the space. You may find that you're inundated by information. That's the first thing. And what's worse, the strategies that you may spend months working on, after 3 months, is no longer valid or may seem irrelevant because the market has changed again. What I would actually advise is for institutions that want to kind of like look at this space, a few pointers. One, it is easy to be skeptical and to ignore it altogether. I think there were times whereby I personally subscribe to that. But I think there's more to it. So Ken, to your point, it is not just about the price action within the markets. It's also about the true innovation that we actually can bring about, leveraging different pieces of technology, bringing it together for solutioning, which previously wasn't possible. Second, it's not wise, I think, to be overly thoughtful or try to pre-plan what you're going to spend in the space. Set up a budget, set up a small team, look for partners, have conversations, explore, right? If you actually want to do things whereby you want to be the one that's driving it, find the right partners, build out maybe certain experiments and figure out your lessons from there. If you want to do something which is a little bit more passive per se, get involved, try to understand certain DeFi applications, NFT marketplaces, get your hands dirty, have your team members get their hands dirty, figure out what's the trade-offs. And I think the iterative process, as you get immersed in the whole field itself, the whole industry, will give you a better sensing in terms of what are some of the maybe short-term tactical play that you may be keen on, depending on your mandate, and what are some of these longer-term strategic adventures, business that you may be keen to build. Right. So this in short, my summary: get your hands dirty, don't think too much, act fast.
Yeah, absolutely. I think this spirit of experimental and iterative improvement has always been something that we at Plug and Play have been advocating, and we're really glad that a lot of like-minded institutions and corporate partners are adopting this mindset and just going ahead with POCs and partnerships. And they see improvements that they initially didn't expect coming out from some of these POCs. And another point that you mentioned, which is really mesmerizing, is that this space is really growing at an unprecedented speed. I was recently looking at a chart that told us how FTX is growing to its current day valuation at a pace in 3 years that has been unmatched by any company in the past, right? And we also saw that Temasek recently invested in them, being one of the fastest growing exchanges. And we also saw that Temasek is incubating a few other ventures in the blockchain field. So could you share with us a little bit what role does Temasek play in the crypto investment as well as venture building world, and how it is playing a role that's different from other investors?
Yeah. So Temasek is an intergenerational investor. That's the way we term ourselves. And really the thinking behind that is that we're excited about long-term macro trends. We're excited about possibilities that may not work out in the short term, but could be exciting, exponential in the longer term horizon. I think one of the benefits and the flexibility we have is that we don't have immediate time pressures, right? To be unlike some of the professionally managed funds out there, they have a 12 months window. They definitely have to attest to the investors. If they're not performing from a P&L standpoint, it's easy for the investors to withdraw the money, and there's a lot of short-term pressures to perform immediately to show returns in the market. I think Temasek sees it differently. We sees it from a longer term perspective. I think there are avenues where we can be involved in, both in terms of investing and seeding certain activities, in trying to catalyze adoption, trying to drive greater awareness, and playing out with the working together with the ecosystem to see how best to accentuate certain new business models that within the short term may sometimes seems like a pipe dream. But in the long term, and I'm talking about a 10-year horizon, even possibly, it could be something that's phenomenal, that has really reshaped our everyday lives. So back to this point, I think what we are seeing here from an organization standpoint, we're excited about the technology. We're not the prophets. We're not exactly sure how things will pan out 10 years down the road. But what we do know is that cryptos and blockchain in general has probably reached an inflection point. There's a lot of excitement within the space, the lots of activities, and it's not going to go back to the past, whereby it's just another toy. It's just something that's being debated about within the crypto evangelist world, right? I think it's coming to a level where there's a lot more awareness, a lot more interest shown by different parts of the society in different countries and jurisdictions. And that is usually the catalyst for a lot more activities within the space. So the role that we play, coming back to the earlier point, is we invest, we generally try to catalyze adoption. We work with partners, willing partners, like-minded partners to try and build new businesses on those fronts if they are of the same interests as us, right? And we are also very welcoming to work together with the ecosystem partners to come in to drive adoption, to look at it and leverage off it as a real technology that could be meaningful for the long term.
So maybe you could give a couple of examples of how you have been working with, partners in building out some of these early ventures that you mentioned.
Sure. So aside from some of the investment activities that we've done, there are a few key ventures that as a team itself we've been pushing it. So one, in mid of this year, 2021, we've actually launched this partnership, this venture called Patio, together with DBS and JP Morgan. It's really focusing on the purpose of commercial bank digital currencies. I personally have been leading the charge on a JV, a joint venture between SGX and Temasek. And the plan there is to create an end-to-end digital asset platform. And we're quite excited about the possibilities on those fronts and stuff, right? And there's another venture which is 100% owned by us. It's called Lemma Tree Group, focusing on the idea of decentralized identity and verifiable credentials, right? So all this are away from what is in the public eye of cryptos, but very much us working in the background of trying to build real-world applications, leveraging off blockchain as a technology.
That sounds really exciting. So, as we see these institutions looking into the crypto world and the blockchain world, and we're really trying to get their hands dirty, some of them are also looking for partners and, whether it's startups, whether it's larger institutions, to, get this done together. So, from your understanding of, the ecosystem players, such as ourselves, what role do you see, us as an accelerator play in advocating, blockchain advocacy?
I believe there are a few fronts for sure, right? One is to drive the increased awareness, to think about this as a technology as well, and what's exciting. And there's a lot of activity, aside from price action, even in the crypto world, whereby new products or new use cases are literally being applied on a month-by-month basis. And previous bugs are being solved at a much faster pace than previous envisioned, right? So the first point there would be about the awareness. Look beyond just about the price fluctuation, look deeper into how some of these use cases, when it's being applied in the right context, can be quite exciting altogether. The second, it's about trying to look at capital flows as well. I think a lot of startups are used to the idea where traditionally it's a way to get financing through your seed round, your family and friends, and move on to the VCs, angel investors, so on and so forth. Within now the broader crypto community, the permissionless space, I think there's alternative forms of financing. And I think the whole idea about DeFi in general will definitely take shape, will be exponential, because it's really at the core of it, it's about intermediation, creating more bridges and ability to pull together sources of funding towards exciting projects that these providers of funds are either interested in funding or investing into, right? So the concept whereby, hey, there are new ways of looking at funding and new ways to do things together. This is where I feel from your perspective as Plug and Play, you guys have an enormous amount of opportunity to explore within the avenues.
No, absolutely. We really enjoy and have the privilege of being the nexus of investors, the projects, the startups, institutions, and even sometimes governments to bring these forces together to really help innovation move ahead and ultimately creating true value for the institutions and for every party that gets involved. So shifting gear from this and try to understand a little bit more about what's happening out there around us. Singapore is trying to lead the region in a lot of blockchain related activities. And as we hear, every now and then there are new regulations coming up. So I want to hear what are some of your personal take on Singapore's position towards crypto in terms of regulation and also in terms of this development going forward.
No, I'm first going to caveat I'm not in a position to speak on behalf of MES. But beyond that, right, I guess what is quite evident is that there's been a lot of uncertainty within the global markets. Now, understandably, and this is part of my earlier point, is that regulators are now sitting up because they are concerned. What if there's a significant downward bias or downward pressures in a volatile asset class such as cryptos? It could cause a lot of people to lose money. What if you have certain unintended secondary or consequences where individuals were to say lose job or to move away from a traditional job, just a mask to try to move into the crypto economy, and then things were to spiral out of control, right? So from a regulatory standpoint, I think there's valid reasons as to why there are considerations and concerns. And some regulators have taken a more conservative stance as compared to others. From a Singapore standpoint, and this is where I quote the recent article, or was it the MS 50th anniversary speech, where they made a very good position in saying MS trying to do its best in terms of trying to position between helping and supporting innovations, but not going too far, right, to the aspects whereby you're creating too much systemic risk within the economy. Now, that role is frankly an unenviable one, because it's easy always to point blame as to why you're not doing enough of something, right? But I think in the context of it all, Singapore has emerged to be a place that has been able to play that balancing role relatively well. And I think going forward, frankly, it takes a lot of efforts from the ground community as well to reciprocate in kind, to say that, hey, it is not just about us wanting to chase quick money. It's also about us wanting to build real-world financial applications, innovations within space. And as those mature, as those get greater adoption and development, I think that's where you frankly will be able to get more confidence from the regulators to say that there is indeed a runway on this front.
No, that sounds really interesting viewpoints. And moving on from here, along with the uprise of crypto, blockchain, and DeFi, we also see a new form of organization, which is DAO, right? And we would love to hear your thoughts and maybe your definition of DAO. What are some of the developments that you have seen, it made in the past, and ultimately how it might impact institutions going forward, financial institutions especially, from an organizational perspective and even philosophical perspective?
In a simple way of phrasing, it's about how do you get together a group of people from various backgrounds, located even geographically in different places, with different interests in the underlying project, coming together to best manage the interest or the direction of the project on behalf of the stakeholders, of the wider community. Right. So I think the concept there really is trying to extend the whole debate between centralization versus decentralization, and whether the concept of an organization, can it move beyond that as to what we are familiar with today, like the companies, which is a centralized body, you have a board of directors, you have senior management in trying to govern it and run it on a daily basis, but all this very much imbued or vested by the decisions or the powers of the end interested parties, which is the shareholders. Right? Maybe there's a better way, there's a different way to do it, where people have a better chance to vote on behalf on an ongoing basis how best to run certain projects. And I choose my words carefully. I would just say projects, because I think it's not exactly certain as to how this will take form from a legal standpoint. Right? Interesting.
If I may, apologies for interrupting. I've realized I forgot to define, DAO. And for the benefit of those people in the audience who are not familiar with the term, it stands for Decentralized Autonomous Organization. So, with that background, I then pass the time back to you, Kevin, to further share your thoughts around it.
Oh, no worries. So, and apologies as well for the audience who are not so familiar with the term. The concept then, without getting too technical, is there a better way for us to run organizations in a decentralized basis, right? And there's a lot of experimentation on that front. Frankly, if you ask me, I think there's a great runway, right? How it will pan out, it's difficult. It's honestly difficult to predict. One thing I've learned within the scene itself is that timing is critical. And the broader question, I believe, is sometimes it may not be useful to frame it as a debate between centralization versus decentralization, because the two may not be mutually exclusive binary outcomes. There could be a case whereby companies are not going to go away in any time in the near future, but that does not mean that DAOs can't coexist beside, right? And I believe it all goes back to the fundamental interest and intent of the end supporters, the community, whoever is supporting a particular project. How best do they want to support a project, and what's in their best interest? I believe this scene is going to be very exciting for sure. There's going to be a lot more developments within the space itself. So for folks who are new to it, I strongly encourage, do your work, do more researches, do more link ups, tap into the space. There will be a series of developments on that front, which will be exciting in the years ahead.
Yeah, ultimately, it's about also rethinking the philosophy of doing business, right? It's really about how to reinvent the pie and recut the pie. In the older days, we have shareholder-oriented mindset where everything is about creating the maximum return for shareholders. And as the society progresses so far, we have come to realization that if we only focus on that, there's going to be a certain type of imbalance that's going to develop within the society, and it's going to cause everything to be disrupted in a way that nobody wants to see. So ultimately, it's about how to create a fairer way to, ensure that the interest and the incentives are right, correctly aligned, to make sure that everyone who participated can be, incentivized in the right way, and ultimately share the big pie and to make it an even bigger pie so that everyone, becomes happier.
And if I may add, part of it, frankly, is how the world has evolved as well. In today's digital age, a lot of the boundaries that we used to drawing are now artificial, right? Just on the conversation before that, let's say, hey, now between work and life, where we're all working from home in such days during COVID situation, where's the boundaries between that? And nowadays in the digital age, where you have co-workers located in many other different places and you're getting on Zoom calls and virtual calls together, it makes no difference when you're on a digital call with a fellow colleague located in the same country or someone else which is in 24 it's in the 24 hours, sorry, 1 month, someone else who is on the other side of the globe itself, right? Situated on the other side of the globe itself. So I think it's with the increasing blurring of boundaries, whereby we have to rethink our existing models of doing things together, of collaborating together. And that's where the power of DAOs or decentralization organization as a concept is getting more and more recognition within the space.
Absolutely. So, looking back at our conversation today, we talked about how, crypto adoption and institutional, both on the retail side and institutional side, has been growing. They're still a little bit unclear, but we all align that there's no way for it to go back. For Southeast Asia or even any financial institutions to get started on the blockchain, the most important thing is to start with it. Don't overplan it, and try to get your hands dirty and really learn from the experience. We also saw that Temasek is playing a role of a long-term investor and being an ecosystem player to bring things together, to help the ecosystem advance. And we also discussed how Plug and Play or any accelerator can also participate in this wave of advocating blockchain adoption. And lastly, we also talked about how regulators can view this differently from different jurisdictions and really help the ecosystem grow at a risk controlled manner. And ultimately, let's end this at a high note. Let's dream big. We have seen multiple use cases that have grown out of the DeFi spaces, or rather the whole crypto spaces, ranging from DeFi to NFT, metaverse, gamify. So in your thoughts for the next, in the shorter run, 1-2 years, and even longer run, 5-10 years, what's next?
So I again, first caveat that I'm not going to be a prophet, but a few things that I'm personally quite excited by, right? So DAOs, we've talked about it. Aside from that, the whole concept of NFTs today, it's about really a collectible, a immutable digital record that makes it such that you actually have ownership of a digital asset. I think there's an extension of that which could be quite powerful. How would the digital asset space actually explode? How would we see traditional instruments that we're used to getting digitalized and the ownership and the transfer of it being brought on to that digitalized kind of permissionless blockchain world? To me, that's exciting. How do you have NFTs interacting with each other? I mean, what we see now, we're getting excited by is the what I call the nascent space of the NFT scene, right? But how do you have those digital records, fungible tokens interacting together? How do end users, investors, showcase those, much like you showcase your luxury products in the real world itself? Those are exciting themes for me. The next one is really the concept of metaverse and how Facebook had recently came about by being very public, saying that they're going to hire about 10,000 employees trying to build that up. Now that may not directly be on a blockchain. I'm not sure what immediate plans they have, but on those fronts, the concept where individuals are spending more and more of daily lives in the digital arena, and how do you interact and bring various elements of your daily lives to the digital arena? I think that's powerful as a concept, and that's exciting as well. So I mean, I could go on and on, but frankly, then most of the time, most of us guys need time to sleep. So it's probably best again to get your hands dirty, get involved in a few, and then figure it out as it goes.
Thanks a lot for your sharing today. I really learned a lot from today's conversation. Thanks again, Kevin.
Thanks, Ken. Thanks for having me. Cheers, guys.
Cheers. Thank you, Kevin, for the insightful sharing. Moving on to our startup pitches, where we will hear from our FinTech program startups on their solutions. For this batch, we have selected startups which are focusing mainly on green finance, payment, and trade finance. First up, we have Stacks, which is headquartered in Singapore. Stacks is the leading Singapore fintech company providing transformative technology for the financial industry. With its live blockchain infrastructure that unlocks value and enables effective, sustainable financing, its client and partners include global banks, national stock exchanges, and asset managers. Please welcome Ben.
Hello everyone, my name is Ben. I'm the founder and managing director of Stacks, a Singapore B2B fintech company. Our team is led by industry veterans, each with more than 20 years experience with the largest banks and institutions, while I have been a successful fintech entrepreneur before this, and we came together with a vision to empower the financial industry in a sustainable manner. Financial markets today are fragmented. This results in close to $900 billion stocked up daily, high transaction costs of more than $600 billion annually, and it's not even effective with a $2.5 trillion annual gap in sustainable finance today. At Stacks, we provide a common blockchain platform for financial institutions to now be able to enjoy same-day clearing. By enabling real-time reconciliation, we eliminate costly errors and the failed trades, which make up 6% of all trades today, so that more capital can now be directed to new opportunities like sustainable finance. And we are ready. Our live platform covers multiple asset classes, including both traditional and sustainable finance. Our platform is modular and interoperable with existing systems via API. We support the workflow of financial instruments with a blockchain that is perpetually reconciled in real time. This means removing the risk of costly errors, providing smart contract automation for more effective launching of products, and increasing liquidity for newer asset classes. We have also scaled up our platform to support ESG finance with a common ESG registry powered by the blockchain. This industry-wide registry is part of the Project Green Print led by the Monetary Authority of Singapore, MAS, and it contains ESG certifications and records from corporates across various industries, thus helping to facilitate Scope 1 to 3 emissions tracking, tokenize carbon credits, and ultimately empower financial institutions' ESG financial products. We have won numerous accolades from our clients, which include national stock exchanges, global banks, and top-tier asset managers. They now enjoy up to 90% improvements in efficiencies and risk management, greater revenue capacity, and are well-positioned to capture opportunities in strategic verticals like sustainable finance. Recognized by the industry internationally, we are an award winner at the annual MAS Global Fintech Awards for Sustainability and Green Finance, a 2-time awardee of the FSTI grant by the MAS for Innovation in the Financial Sector, and received other global industry awards from Gartner, DSEP, UBS, and more. Having achieved our targets for 2020, we are on track to achieve our targets to be the platform of the future for the financial industry, scaled up within APAC and then globally. And this is all available via a platform that is scalable, interoperable, and nimble. The platform can handle complex business logic for the financial industry, while API connectivity allows existing systems to interface with it flexibly. Our SaaS business model allows you to get started on a quick pilot to validate your business case with no risk, with very low implementation costs to go to market rapidly with our ready ecosystem partners. With our live platform and ecosystem, we hope that you can partner us to unlock massive value in the financial industry together. Thank you.
Next, we have GreenArc, which is headquartered in Singapore too. GreenArc's iESG solution provides credible and transparent impact measurement and reporting, hence helping financial institutions maximize the contribution of their debt portfolio towards creating positive social and environmental impact. Please welcome Ronnie.
Hello everyone, I'm Ronnie, CEO and co-founder of GreenArc, a B2B impact and ESG analytics fintech that helps financial institutions quantify the social and environmental impact of their lending portfolios. As we know, sustainable investments have been experiencing unprecedented growth over the last decade and has only accelerated through the pandemic. This has resulted in multiple impact and ESG measurement and reporting standards. Therefore, financial institutions are struggling with impact measurement across various standards, reporting due to lack of credible tools, and impact washing, where impact claims are made without evidence. Introducing GreenArc's iESG solution, which solves these issues using 3 key features: impact analytics, custom reporting, aligned to global standards, and impact audit to provide independent verification of impact using data science. Of the 300 plus ESG and impact solutions in the market, GreenArc is the only one that covers private debt portfolios, including loans, at an end beneficiary level. Impact and ESG analytics market falls within the broader banking and financial services analytics market and is a sizable opportunity. There is a blue ocean that exists very similar to credit scoring before rating agencies were set up. This opportunity will last for 6 to 12 months before the gold rush starts. To look under the hood a bit, we spent over a year creating a methodology aligned to global standards, including GIN IRIS+, IFC principles, and UN SDGs. Being part of the globally recognized IMP's Impact Frontiers cohort has provided significant credibility to GreenArc. The IESG solution integrates large datasets, including socioeconomic benchmarks obtained from 200 plus jurisdictions, as well as loan data types from financial institutions to provide granular impact score. The solution was built with scalability in mind, allowing financial institutions to plug in to our solution using an industry-first impact API, as well as an MAS-funded impact audit research project with BNP Paribas to prevent impact washing. We work on a SaaS-based pricing with a one-time setup fee and a recurring usage fee. We also have access to a large loan dataset that allows us to provide value-added services. In terms of traction, we're doing well with a number of engagements and a healthy pipeline across banks and asset managers. We are also tracking significantly ahead on our assets on platform target. We have received multiple industry accolades, including this year's Capgemini Global Financial New Tech Watchlist and Abu Dhabi ASEAN Top 4 FinTech. We have a clear pathway to scaling, consisting of partnerships in the banking space, including a leading core banking solution provider, a UK-listed financial analytics provider, and a tier 1 consulting firm with leading banking ESG practice in Asia. We have a number of competitive advantages, including patent-pending impact technology, extensive datasets, strategic partnerships, and a team of industry veterans who have an extensive experience across finance, impact, and AI. Please reach out to us if you have any questions.
Next, we have One Hypernet, which is headquartered in Singapore too. One Hypernet is a global payment network that connects the world's foreign exchange markets on a unified ecosystem powered by enterprise blockchain technology. Their proprietary netting algorithms leverage on confidential computing to reduce cross-border fees by 96% while preserving full privacy. Please welcome Alston.
Hello, my name is Alston, co-founder of One Hypernet, a global payments network built on enterprise blockchain. With all the ongoing fintech innovations today, why are cross-border payments still so expensive? The reason lies in how cross-border payments are settled. Most of the innovation has been on the front end, but nothing has changed at the back end. All payments are still settled via legacy infrastructure known as correspondent banking. When a payment is initiated, the transaction gets passed along in a chain of banking agents until it finds a connection to the intended recipient. This results in layers of fees, and businesses lose 1 to 10% of their transfer amount. In general, the lower the liquidity and transfer amount, the more they lose. Instead of searching through a chain of banking agents, our solution generates the shortest payment route from all possible permutations. This reduces fees by 96%, and our solution was awarded the Innovation Grant from MAS, or Singapore Central Bank. Now, 96% saving sounds too good to be true. It isn't, and allow me to explain why. Imagine two parties that make multiple payments to one another. Instead of settling each payment individually, the two parties agree to settle the net difference once a day. This way, the transfer amount and the number of settlements are greatly reduced. If you could save so much from netting with just one party, imagine the scale of savings from netting across multiple parties and even multiple currencies. However, multilateral netting only works if you give up data privacy to a central party to calculate the netting instructions. As you can imagine, This is a major breach of data privacy and does not work for banks or corporates. To resolve this, we created a decentralized solution with confidential computing to aggregate all payments in a secure enclave. This allows the final netting instructions to be calculated without the data being accessed by anyone, not even by us as the network operator. When privacy is guaranteed, the market is widened to include all potential flows for netting. This further reduces the number of settlements, achieving the most efficient FX prices possible. Netting underpins our full network of FX products, and each solution in turn serves as an acquisition tool to channel flows back to our multilateral netting solution for settlement. Regardless of the use case, we save users around 90% in cash flow requirements and cross-border fees. Let's go through a few of our solutions. Our payment solution allows businesses to make cross-border payments to their overseas supplier via a simple web portal or direct API access. These transactions are then routed to our network of FX providers, where it is executed via the most competitive provider. We have processed $500 million in transactions within the first 30 days of soft launch. We also became the official payments partner for Proxtera to power their network of 400,000 SMEs across Asia and Africa. Enterprises can also use our netting solution directly to reduce their cross-border fees and better manage their cash flow. We're currently building a customized netting solution for one of Singapore's largest logistics enterprises. Its 30 trading partners upload their trade documents to our enclave, where the trade terms, invoice currencies, and invoice values are automatically extracted. Our netting solution then calculates the cheapest way to offset and settle their invoices, all while guaranteeing data privacy. In a small pool of 7 users, we've reduced 81 cross-border payments to just 6 settlements, reducing the cash flow needed to settle their invoices by 87%. Banks also use our netting technology to reduce their own liquidity costs, or to explore proof of concepts to integrate with central bank digital currencies. We're currently engaging with several of the largest banks in ASEAN to work on a joint proof of concept, which is currently pending press releases. Our team has a proven track record of 30 years of experience as founders of several large payment providers. Most notably, we previously launched Singapore's very first online money changer, which then went on to deliver millions of dollars in foreign currencies every month. Thank you for listening, and please feel free to speak with us through the following channels.
And now we have Arrow, a Singapore headquartered company. Arrow removes the clunky and cumbersome checkout process for the online customers, while driving checkout conversion rates and increasing sales for the merchants. Please welcome Neil.
Arrow is really built to increase sales for e-commerce players. Customers check out in seconds. If they save their details on one merchant before, they can check out anywhere across the Arrow network of merchants in one click anytime. So this means you don't need to create multiple accounts every time you go to a new website. We help e-commerce clients manage all their payment gateway and payment provider integrations in one. So for a lot of the customers, we connect to all their BNPL players, we connect to all their e-wallet players, we connect to all their credit card gateways, and they just manage one connection, which is to us. So this is what I mean by Arrow taking care of a lot of the heavy lifting that's sometimes too complicated, or sometimes digital first or online merchants don't really want to be bothered with. They connect to Arrow one time, and then Arrow connects to a multitude of payment gateways, digital wallets, schemes, bank transfers, OTC, anything you can think of. Arrow, we have a dedicated payment methods team dedicated to always integrating the best and the latest payment methods. We also acquire customers at checkout without any signups. This is something a lot of people and a lot of e-commerce merchants don't do today. We bake in the account creation as part of the checkout process. And then we pass all this information on to the merchant for them to manage CRM. And this just doesn't happen for one merchant, meaning if a customer creates an account at one merchant, this customer can use the same Arrow account to check out across any of our 80+ merchants instantly without creating accounts ever again. And then finally, what we do is we help merchants close sales on any social platform without redirects. What we do is we have a tool that allows merchants to directly sell in social media and even chat. So a lot of our e-commerce clients run ads on Instagram, on TikTok, and then what they do is, they have this shop now button or swipe up, and then what happens is it redirects to the merchant site where the customer is expected to complete the sale. But usually this is, I guess, untracked or can't be tracked, right? You're at the mercy of when the customer decides to drop off. And sometimes, when the customer lands on the site, they navigate away and the sale is lost. A lot of times in a lot of countries in Southeast Asia, commerce happens in chat. What we do is we directly share what we call checkout links. Merchants can initiate a checkout directly inside the direct message. Same for WhatsApp. Instead of leading them and redirecting consumers to websites, they go directly into a checkout. And then what happens is the checkout is instant. If the consumer is an Arrow user before, if not, they go through the same, mobile first streamlined checkout experience, and this converts the sale instantly, and people can start tracking this. Today, we integrated a whole bunch of providers. We're on WooCommerce, we're already on Shopify, Magento, PrestaShop as plugins. If merchants have a custom site, what we do is we have API docs. Merchants can integrate easily with one API, and with one integration, they get access to all the payment gateways, all the different payment methods that are out there as well. One of our bigger merchants, they're Bathing Ape. We were live in the Malaysia store. Previously, their checkout looked something like this. And today, the checkout looks pretty different with Arrow, right? It looks something like this. Mobile first, they have 80% of their traffic mobile. So it just makes sense for them to have a checkout that is optimized. Right away, I think within 1 month, they saw a 12% increase in conversion rates. Also an increase in order value. They saw about 15% increase. And for big merchants like this, basically 300% in conversion rate increase leads to a lot of increased sales. This is what Arrow looks like on the checkout. We're not discreet. We look like any other checkout button just with the Arrow logo. So to sum up, our merchants across Singapore, Malaysia, and soon Indonesia are starting to see the effects of what Arrow checkout can do for them. It's less than 2 seconds to check out versus today on average takes about 5 seconds. We also have a 22% increase in sales across all our merchants, and definitely 4 to 8 steps less to complete checkout with Arrow. And we're just getting started. We have interesting things like group buy incentives post checkout to attract new customers. We allow merchants to also save and convert abandoned carts. So if consumers drop off Arrow, we allow them to retarget these consumers because we know exactly who they are. We also intend to go into order tracking and notifications for all your users. Now within Arrow's consumer dashboard, you can track all your different purchases across all the merchant sites, all in one dashboard. What we're working on is upselling items across other Arrow merchants. So for Arrow, there's very low risk, right? Early major upsides for merchants. There's no change to existing setups. Integration is easy. And we increase conversions, right? And more conversions means less drop-offs, and less drop-offs means more money for customers. Thank you, everyone.
And finally, we have Doconomy, which is headquartered in Sweden. Doconomy provides mobile banking service for your everyday climate action. Please welcome Florent.
Hello everyone, my name is Florent Bess. I represent Doconomy. Happy to be here today. Today I will share with you a story about one innovation called Holland Index that is at the intersection of technology, finance, and sustainability. At Doconomy, we believe it's time to connect consumption to its impact on the planet. We are in the middle of a severe climate crisis. We all need to act. We have to act now. People around the globe feel disconnected. Why? Because they don't know how their daily life impact the planet and the climate. That's why Doconomy developed a consumer-facing service called Do. It's the world's first mobile banking app. It was first introduced to consumers in Sweden back in 2019. A solution helps you track and measure the carbon footprint of every item that you purchase using your credit card. The solution is based on true ESG data that is provided by S&P Global. Today, the Holland Index is available as a public API that is available to any bank who would like to provide an impact driver service to the client. The Holland Index is available on the cloud. We also provide several SDK and a white label application. More than 20 clients in 19 countries have launched services using the Holland Index. Our partners today include MasterCard, UNFCCC, S&P Global. Our ambition is to reach 1 billion people before the end of 2021. It's a bold ambition, but we have high hope. Recently, we joined forces with UNFCCC and launched a service called the Lifestyle Calculator. It's a web-based tool that calculates your footprint based on a series of easy-to-answer questions. The service is also available to any bank who would like to launch the service. We are entering an era of shared responsibility between consumer, producer, retailer, and financial institution. We at the economy would like to accelerate that transition. That's why we would like you to join. Thank you.
Thank you to all of our speakers and startups for your sharing and presentations. Before we close off our FinTech Expo, we would like to present our inaugural Mentor Awards for the most engaged mentor for our FinTech program, to recognize our mentors who has been the most engaged during our program. For our FinTech program, we would like to present the award to Milena Nikolova. Congratulations, and we're really glad to have you to be part of our program. It has been a pleasure working with you over the last few months, and I'm sure our startup feels the same way. Once again, congratulations, and we look forward to working with you closely again in our subsequent programs. Now we have come to the end of our FinTech Expo. If you would like to find out more about any of our startups, please feel free to reach out to us, and we will be happy to assist you. Until then, take care and goodbye.